Hi everyone. Welcome. Hi everyone. Good morning. Good afternoon. Good evening. Welcome to CoinGecko's 31st meetup, virtual meetup. My name is Zhong. I'm the head of research here at CoinGecko, and I'll be your host for today. So today is going to be very exciting and very interesting. We're going to have two segments to our meetup as per usual. So the first segment, I'm going to quickly talk you through our 2024 Q1 crypto industry report that you can see on the screen already. So this is a report that we published just last week, and hopefully most of you have had a chance to read it. If not, you can always find this on our website. Followed by that, I think we have a very exciting panel discussion right after the break, and we're gonna actually talk about Polkadot, right? And the Polkadot, we're gonna peer into the Polkadot ecosystem. It's going to be very interesting because I think it's an ecosystem that's been around since 2020, but I don't think people know too much about or understand how far they've come from 2020. So I think without further ado, I'm just going to quickly jump in and talk about our report, and then we'll move on to the panel discussion later. So obviously, there's also a Q&A box in the stream. So if you guys have any questions at all, just feel free to drop it in there. We'll be happy to answer those if we have time at the end of the meetup. Yeah, so let's get into it. I think firstly, before I start, I also just want to thank Polkadot as well as BingX, Polkadot for sponsoring this meetup, and BingX for sponsoring the report, and I think us continue to do the work that we do. So this is going to be a very quick, summarized, abridged version of the report. I think the whole report is about 50 pages long, and definitely we're not going to go through all 50 pages. But I'm just going to pick up some of the most important points and important slides so that you guys have a good grasp of what actually happened in 2024 Q1. So we start with Bitcoin, and I think this really was the story for 2024 Q1. You can see that on the slide itself, we started the year at 42,000. And we pretty much closed out the year the quarter at 71.2 thousand, right? This was a 68.8% increase in the price within a single quarter. And obviously, we've broken through the all-time high or the previous cycle's all-time high, and a couple of times to make new all-time highs. The highest it's been is, you can see on the slide, 73,098 is the new all-time high, right? So this 68.8% price return in Q1 actually outperformed the overall crypto market. Overall crypto market grew at about 64.5%, right? So Bitcoin is still showing a lot of strength in Q1, and really I think it's really due to the a big reason is obviously the US spot ETF approvals, right? So that happened on January 10th, and it's something that we'll cover later in the deck as well. But yeah, that actually spurred a lot of excitement. A lot of people were, and I think are still watching, fund flows coming into the ETF. It took, close to 3 months, but I think we're seeing the flows finally stabilize. But it's been a great quarter for Bitcoin. Obviously, the other big factor driving the price of Bitcoin in Q1 is, the halving that we just went through, pretty smooth, I would say, on the 20th of April. A lot of anticipation before the halving and what it would do to the market. And, that's also why you see, a lot of excitement and a lot of attention on Bitcoin, right? I think moving on, I think, not just Bitcoin, right? So Bitcoin had a great quarter, but you can see across the board, we have pretty much, this is top 5 cryptos across all the different categories. We've pretty much seen, 2 consecutive quarters of green, as you can see on this on the chart on the left, right? And everyone posting, or most people posting some strong gains, right? In fact, if you look in the top 5 crypto, you can see, Bitcoin, obviously, we just mentioned, but Sol as well and BNB were also very strong in Q1. Sol almost doubled its price. BNB at 94%, also close to double. ETH at 60%, just slightly behind BTC. The only one that didn't move too much was Ripple. Right, across the top 5 DeFi tokens, again, strong gains across all, Maker in particular, and GRT. So the graph tokens have strong good gains. But I think one of the big stories for DeFi was actually Uniswap, right? So gain about 80%. I think rally after the fee switch governance proposal actually came sometime in February, bringing a lot of excitement and a lot of anticipation that Uniswap was finally gonna turn on the fee switch for its uni governance token holders. Exchanges also did pretty well. We now have BitGet, whose BGB token has actually now broken into top five, replacing KuCoin's KCS token. And also there's been a resurgence in gaming tokens, right? So you can see across what we have in the top five there: IMX, Gala, Sen, Axie, and Mana, all showing strong numbers, right? And also even the sixth one that we don't have on the chart, but it's just almost the same, I think, in market cap with Mana, is Ronin, which also posted an impressive 114% gain as well, like more than doubling what it was in 2020 when it ended 2023 Q4. So overall, I think very strong numbers in Q1 across the board. Obviously, it's the third week of April now. We're seeing some retracing and some consolidation of these soft price levels. But I think even if you just started in 2024 January, right? Say you woke up on New Year's Day and you got into the market, you're probably still in quite a good position if you look back from there, right? I think zooming out a bit, looking at how crypto is performing against the rest of the asset classes, and particularly against US equities. I think this is a slide more on correlation, but I think just to give you guys a bit of color, the US equities market, so the S&P 500 and the Nasdaq as well, which is not shown on this chart, also gave good performance. Also showed good performance in 2024 Q1. I think driven by certain expectation that the Fed may cut interest rates still in 2024. Perhaps these expectations are changing now, depending on how you interpret the data that's coming out from the US at the moment. I think the S&P was up by 10% in 24 Q1, and that was also a very strong quarter. And you can see actually that that meant that even though crypto also rallied, with crypto rallying strongly as well, both markets are actually back to quite a high correlation. So 0.84 correlation is certainly one of the higher points that we have seen looking back throughout the previous year. So I think to a certain extent, it may be a sign that macro forces are back in play, especially as we are looking at the Fed potentially starting to, well, thinking about, but considering, I think strongly considering whether that it's time to pivot from its strategy or from its approach from the last 2 years of monetary tightening. And also, I think macro is playing a bigger role as well, because there's just so much geopolitical tensions around globally, and that is also something that people are watching quite closely as well. I think nonetheless, I think you see that total crypto market cap kind of analyzed quite a much higher analyzed volatility compared to equities. I think that's to be expected, but it also meant, well, it also resulted in, I guess, a much better performance. Total crypto market cap actually performed 4.2 times higher than the S&P. This is also something I think people who are really interested in, and always ask us, like what are people trading, what are people watching, what are people paying attention to. And I think it's no surprise, I think, if you've been trading or listening in just to the market or following the market at all in Q1, right? So you would know that the main sort of narratives are around AI, meme coins, and real assets to a certain extent. Real assets really driven by Ondo and BlackRock launching its own BUIDL tokenized treasuries fund, right? And really those top three suck up about at least based on our web traffic, about 75% of all the attention. So three-quarters of the attention for users of our platform, right? These were the main three. And then below that you see Solana ecosystem still, I would say, by far the main sort of chain ecosystem that gained a lot of attention in Q1, and then things like gaming and stuff like that. Few things, if we compare this to 2023 Q4, that sort of fell off certain interests. So things like DeFi has sort of declined a bit, Avalanche ecosystem as well, NFT tokens and FTX holdings, I guess, with the conclusion of the case. And, it seems like we're close to the conclusion of the bankruptcy proceedings. People's interest in FTX has predictably declined, right? But yeah, I think, these are the main sort of CoinGecko categories that people have been watching. And yeah, I think some of the other things are things like Deepin ERC-404 that launched in Q1, and the base ecosystem, which also garnered its fair share of attention and growing, but certainly nothing as much as our top three of AI meme coins and RWA. Okay, let's talk about US spot Bitcoin ETFs, because this is one of the big things that happened. So as people may know, so just bringing people back to January, the approval came on January 10th, right? And started trading immediately, right? And you can see that actually this chart starts at 28.6 billion. So for those that don't know, this is because Grayscale converted their GBTC trust from a private trust into an ETF. So it already had 28.6 billion dollars in AUM, in assets under management at that point. So it converted that wholesale, right? So it literally started at 28.6 billion, whereas everyone else had to start at zero. And I think if you just look at the chart, you'll see that it's been very interesting. I think just a few things to point out. I think one is, I think it's been a great response to the ETF so far. 55.1 billion, we closed the quarter at, compared to 28.6 billion in January. That means, like, the total AUM actually close to double across the US spot Bitcoin ETFs, right? So people sometimes say that all the flows are just switching from GBTC going to the other alternatives, but actually that's not exactly true. We are seeing fresh inflow of funds into the market, into the US spot Bitcoin ETFs. Yes, I think it's still unclear how much of this actually may come from Europe and out there, but I think it's still a very positive sign for the market and for Bitcoin in general. I think it really shows that there is strong interest in Bitcoin and crypto by extension as an asset class, right? JBTC, like I said, started with 28.6 billion. It's sort of declined to 21.7 billion by the end of the quarter. This decline, I think, 6.9 billion in net outflows, really owing to people who bought GBTC who got into GBTC really early when there was a massive discount against the price of Bitcoin, taking profit, right? And it also launched with significantly higher fees compared to its competitors. So to a certain level, I'm quite sure there are certain levels of switching out of GBTC into some of the other funds if people want to stay in those positions, in order to pay less fees to the fund manager, right? In terms of outside of GBTC, who is in the lead, I think BlackRock has established itself as the main sort of alternative. I think it has the second largest AUM behind GBTC, and it's closing in. It's also, I think perhaps more important as well, is that it's also the fund with the most trading volume and the most, I would say, liquidity, right? So a lot more people are trading the IBIT ETF, so the BlackRock IBIT ETF. And from that perspective, even though it has less AUM than GBTC, it has even more trading volume. And I think from that perspective, it's really shown that it's sort of been the fund that, or sort of been the ETF that most people have coalesced around, right? In third spot is Fidelity, and then followed by ARK, Bitwise, and then sort of you see a drop off in terms of the remaining competitors. They haven't been able to capture that much AUM. Like I said earlier, fund flows for these things have sort of stabilized. And it's going to be interesting to see, now we are post halving, is there going to be sustained interest throughout the year? and moving into the future, like how do investors who invest through the ETF, whether those are institutional or whether those are retail, look to either take profit or position longs, into the market. And I think ETF fund flow watching, I would say, it's a bit like whale watching, is going to be an interesting spot for the crypto market, moving forward. I don't want to talk about the price of ETH. I think I already covered that earlier, 60% up. But certainly, I think one of the big narratives of 2024 Q1 for ETH was restaking, right? So people like really driven by EigenLayer, right? So EigenLayer came up first with the concept of like you could restake your ETH, you could restake your stake ETH. Put it that way. So you could stake your ETH in the protocol, and then you can sort of restake it. And so it was a mechanism where you could borrow or leverage on the security budget of Ethereum in order to secure other protocols, other networks as well, right? And through this eigenlayer and its sort of point system, it sort of spawned a whole bunch of other sort of what we call restaking protocols, right? The likes of, you probably heard of EtherFi, Renzo, KILT, Buffer, Swell. These are protocols that have sort of popped up to help people restake their stake ETH or restake their ETH, native ETH, if they haven't staked it yet, to sort of, I would say, increase the yield that people are getting from staking their ETH. Right? And you can see, I think, at least from Q1, the one that is clearly in the lead amongst the restaking protocols is EtherFi, right? So EtherFi has about 21% of all restaked ETH. Even though I think you'll see from the share, actually there are about half those people also who are actually directly staking still into EtherFi, not still directly restaking into EigenLayer, right? So that's the gray part here, and that's still a big part of the restaking landscape. Nonetheless, I think 4.3 million ETH has been restaked on EigenLayer. I think that's the last we checked, about 10% of all stake ETH. So there's certainly nothing to sneeze about. Something that can certainly, if more people get on it, can get quite big as well as we progress. And I think perhaps more people get comfortable from the idea of restaking your stake ETH again. Yeah. The other thing I wanted to cover for Ethereum is we often talk about layer twos and how everything is moving to layer twos. We also had obviously the Denkun upgrade in Q1, right? That actually helped bring down a lot of the fees from for Ethereum and its for Ethereum layer twos, right? And that certainly helped the layer twos in sort of attracting users back. I think if you look at the total transactions across all the layer twos, we have seen a jump in just purely the number of transactions going through layer twos, right? Obviously, this includes OPBNB as well, but in general, it's really been an upward trend, right? This is 40% increase, right, from 2023 Q4 to 2024 Q1. And if you look at the number, right, so 900.7 million L2 transactions just in 2024 Q1. To put it in context, there were only 1.3 billion L2 transactions in the whole of 2023. So certainly, I think off to a very, very strong start. I think it's a sign that people are really users, I would say, are really getting onto the L2 narrative and really attracting. If you want to transact on EVMs, this is you go to an L2 now. You don't necessarily start on mainnet because of all the fees and the performance and things like that, right? I think amongst the Ethereum L2s, it's a constant battle, I guess, on who comes out on top and things like that. Obviously, a lot of this also depends on airdrop farming. I think it's safe to say, this quarter you see actually that Linear has pulled out in front, just slightly ahead of Arbitrum. There's also ZK Sync, then Base, then Optimism, then Blast, right? And yeah, I think it's a sign of Linear and ZK Sync definitely people were farming the airdrop up, whereas Arbitrum still stably, I would say, from the old sort of optimistic rollups, the in the lead. But we also see base getting a surge, especially in March, as meme coin season actually came onto base, right? And you can see it's actually pulled ahead of its I'll say its sister chain, or where it got its stacked from optimism, right? In terms of activity. And yeah, I think you can see blast surging, and you're going to see this narrative again repeat when we talk a bit about DeFi and TVL and things like that. Solana, again, I'm not going to talk about Solana itself. Price is up by double in 2024 Q1. But really, I think what people really, really paid attention to Solana in Q1 was meme coin season, right? So if you if you don't know any of these meme coins, I think probably most of you can recognize this, right? With Bonk, Boom, Bobcat, Slurf, right? When Bolden, yeah, these are all meme coins, that really popped off in Solana, especially in March, right? And really really made a splash. You can see that the market cap of top 10 Solana meme coins actually jumped by 800%, so more than 8 times, you know, um, what it was when we started the year. I've already named some of the major ones. I think one of the big events, just want to call out a few big events. I think one is the meteoric rise of WIF, right? So I think driven by Ansem and his cult or cadre of followers, very quickly, after it emerged, it sort of flipped the I would say the original meme coin on Solana, which was Bonk, and in sort of early March, right? And so have really sort of 2x the market cap of Bonk, and it's very very far into the lead. Also notable is BOME, right? So BOME, uh, Book of Memes, right? Launched on March 14, and really just reached 1 billion in market cap in just 2 days, right? And it's really been a meteoric rise, right? Even though some of this have consolidated as well. Um, Other thing that came out of this was obviously this whole pre-sale meme coins or narrative. Not sure if that was a good thing, but certainly I will caution people to sort of do your due diligence, do your own research, think very hard about sending money to random sort of addresses when you're unsure who it is and what's the project to. But it is what it is. I think it sort of really raised a significant amount of money during that time, and I think I think a lot of people also came out to caution people with just, I guess, speculating on meme coin pre-sales. Yeah. Moving on, this is DeFi. I really only have one slide, and really to show you how things have changed. I would say, Ethereum still leads by quite a significant amount, right? In terms of multi-chain TVL, right? This is DeFi TVL only. This is not total TVL bridge or whatnot. You can see that the multi-chain DeFi TVL is up by 78%, so significant rise, and sort of you can see market share slight changes across. Solana obviously surging now, third in the rankings, ahead of BSC, just behind Ethereum and Tron, right? And I think what's going to be interesting when you look at this and when you compare to a chart later is that you'll see that it's been able to generate a lot more trading activity, right? A lot more trading on its DEXs, on its decentralized exchanges, with a lot less TVL compared to Ethereum. That's also sort of been a thing that people have been discussing, sort of the relative capital efficiency of this protocol, right? The other thing that is also surging is sort of blast and base, right? So you can see here, we highlight them in the last sort of bubble, really surging, catching up with the older ones. I just checked today, they have actually, from a DeFi perspective, surged ahead of Avalanche, Polygon, Optimism, to be the, I would say, largest DeFi L2s, just behind Arbitrum, right? So that's been a sign of all the attention, and perhaps again airdrop farming on these chains. But certainly, I think a lot of attention has gone to these two layer twos in Q1, and they continue to surge even now. Moving on to NFTs, and running out of time, so I'm just gonna move a bit quicker now. Just a few slides left. I think with NFTs again, it's been an encouraging quarter. Perhaps not as exuberant as the coins, but we do see an increase in trading volume, right, going from 3.1 billion in Q4 to 4.7 billion in Q1. This has been largely, really driven by ordinals. Again, ordinals coming back as as volume surge and people look back to NFTs and things like that, right? But you'll be surprised to see, I think, Magic Eden had a very strong Q1, surging ahead in March to become the top uh, NFT marketplace, right? And this is really driven by its Diamond Rewards program. And also, I think it's early back on ordinals, right? So it was the on ordinals and inscriptions in general. I think it was one of the early ones to support ordinals, right? Together with OKX and Uniswap, Unisat, and they've been the beneficiary of the ordinals wave and interest in ordinals. But I think when in Q1, with its Diamond Rewards program, it's managed to take away market share from all of its competitors, in ordinals, but also on Ethereum, also on Solana, away from the likes of Blur, from OpenSea, from Tensor. So it really shows you, where people's attention are, not necessarily on NFTs or fundamentals, but also on farming for points and hoping for some more airdrop at the end of it. Very quickly, just 2 more minutes, 2 more slides to go as well. This is trading volume on DEXs. I think from a spot perspective, we saw the volumes in Q1 2024 Q1 close to double what it was in 2023 Q4. This is a major jump, and you can see one of the big reasons why, or the main reason why I would say, is the performance in March 2024, 190 billion dollars traded on DEXs, right? And we see this being reflected on centralized exchanges as well, the likes of Binance, OKX, Bybit, Upbit, all saw major surges in volume, close to double what they were doing in Q4. And this level of volumes haven't been seen since 2021. So Q4 2021, right? So when we were really at the peak of the last cycle's bull market, and when Bitcoin made its all-time high, its previous all-time high, right? So this is really strong quarter for exchanges. And I think what's interesting to point out, I think just from DEX, what I really want to call was the relative shift in trading volume and in activity across the different chains. You can see Arbitrum started really strong, well, finished 2023 really strongly and had a very strong early 2024 because they were running an incentive program, but you see some of that taper off as well. Solana then came to the fore with meme coin season and things like that. So it's quite an interesting evolution, again, reflective of where the market is. And it'll be interesting. What's also interesting is that you do see Ethereum's market share, Ethereum mainnet's market share shrink. It's now below 50%. It's something that it's very rare. And it'll be interesting to see how this continues to evolve. Finally, I think just wanted to call out, perpetuals as well saw a major increase in volume, right? These are centralized perpetuals, and you can see again the jump happened in March 2024, 65.3% up across centralized exchanges. So the 13.5 trillion that was traded in 2024 Q1 is actually a new all-time high. So again, a sign that people actually leveraged up significantly in January in Q1 in anticipation of or in anticipation, and also I guess driving the bull market as well, right? So I'm just gonna stop there. I think sort of overran slightly, but this is all I have for you guys again today. Again, I would say that the presentation is hosted on our website. You can go and find it at www.coingecko.com /research. You can click through and you can read all 50 slides. There are a lot more information, a lot more insights in there. Again, if you have questions, feel free to drop it in the Q&A. We'll get to it if we have the time at the end of this presentation, at the end of this panel. So I'm going to take a quick break, and then we're going to come back again, maybe in 30 seconds or so, and we'll move on to our panel discussion on Polkadot. So thanks everyone. Just hang around for a bit. And we're back. Hello, everyone. Good morning, good afternoon, good evening to our guests. Not sure where you guys are. I think welcome to our CoinGecko's 31st virtual meetup. This is the second part, as I explained, of our meetup, and we're going to have a panel discussion on peering into the Polkadot ecosystem. And I think it's going to be a very, very interesting discussion. We have great guests, three great guests that have joined us today. I'm very happy to introduce Ingo, who's the founder of KILT Protocol, Bill, who's the Director of Education and Governance Initiatives at the Web3 Foundation, as well as John, who's the CEO and co-founder of Mythical Games. And yeah, I think looking forward to our conversation today. Do welcome everyone to our meetup.
Thanks for having us.
Yeah, thank you.
Yeah, so I think we'll probably go into what everyone sort of does and what their projects sort of do in the panel discussion. But I think just want to start out. I think just to set the scene, for the people that are on the call, for newer users who may have joined, this cycle or much later, in the previous cycle, you may not be too familiar with Polkadot, right? It's sort of an ecosystem that perhaps not many people have too much attention on, despite all the things that's happening in crypto right now, right? But the team has been working very, very hard, I think, to deliver results, to deliver improvements to their chain and to their ecosystem. There's Polkadot 2.0 is happening, and that's something that we're definitely going to discuss later. I think perhaps we'll start with Bill. Share with us a little about what is different about Polkadot, right, compared to the other blockchain ecosystems. What sets Polkadot apart, and some of the importance or milestones and developments that the chain and the ecosystem has achieved in the past year.
Yeah. So first off, I want to say how fun it is for me to be involved here. I've been a CoinGecko fan for a long time. I've got over 30,000 candies. Thank you very much for having me on. So I think the first thing that I want to explain is that Polkadot is not a blockchain, right? It is actually quite a few blockchains that work together. So we have a central chain called the relay chain, which helps coordinate a bunch of other chains. It's essentially a sharded network. So we have actually 50 of these chains, including KILT, founded by Ingo here, running on Polkadot. But all of these chains are secured by Polkadot and can interact with each other. So they're built using Substrate, the Polkadot SDK. So this allows anyone to build a blockchain that can then be connected into Polkadot, and then it can be specialized for its particular use. So we have identity parachains. We call these chains parachains. We have prediction markets. We have smart contract chains, all kinds of different chains, gaming chains that can all interact with each other. And so the whole is sort of more than the sum of its parts. It's like an internet of blockchains. The fact that you have all of these computers interacting with each other, similarly, you can have lots of different blockchains interacting with each other. So a couple of the ways that Polkadot really differentiates itself from these other chains, we really are truly decentralized. We have a totally on-chain governance system. The development of the chain and the direction is entirely chosen by dot holders. Nothing can happen without the dot holders voting on it. No parameter change, no code change. But on the other hand, it's also very easy to upgrade. So there's actually a pretty interesting technical aspect to this that allows it to be easily upgraded. You don't have to coordinate among teams. It just sort of happens, right? Just like when Amazon updates its website, you don't need to install new software. When these chains get updated, you don't have to do anything as a user or node runner of these chains. So we've actually seen on our main network, on the Relay chain, 54 network upgrades, where we've changed features, added new things, added new capabilities. Oftentimes without the users, they don't even have to be aware of it. And we've had over 1,000 upgrades of the individual parachains. So I think this is the big difference between Polkadot, is because it is actually a lot of chains, it's very scalable, it's very decentralized, and it's very easy to upgrade and evolve. And as we develop new features.
Nice. I think that, thanks, Bill. I think that sort of sets the scene for us, right? So when people think about Polkadot, when people think about blockchains, they're sort of like a main one, but Polkadot's not really set up like this, right? So it really, a lot of the applications and a lot of the things that people do are actually on different parachains, right? So I want to get to Ingo and John as well. Perhaps both of you could introduce yourself, your company, what does it do, right? And sort of tell us why Polkadot, why did you pick Polkadot, right? And how has the experience been, building on Polkadot so far? So perhaps Ingo can go first. Yeah.
Okay. So we're building out that actually in 2018, we also 2018 on that time we were in the identity space, and then that really could define business model. The really great, and we thought that we of build one who wants to first be very cheap today and very, very expensive tomorrow. What, for example, we want with an to have pricing, right? So I can say, yeah, depends on the that a little bit between the real in the end, industry, governments, and so on, and then we because we need the nation for security reasons, right? So we have to cater for both, like way to so complex and have completely everything. Decided that we need our own blockchain, and not many places you can build your own blockchain. Time the technologically most we definitely made the right choice. On top of is that the system is more or less. When you just put on some Ethereum, one customer and more proud because we are and we don't even compete for court because it's so we don't have to compete for systems like that. We can all it up full in the end. For example, for Mythical, the other way around. Actually, a lot of sense to is help each other than beating each other. This is something we also not break other people outside there say we can using which if we don't change, we can make propose the community. If that is a good idea, we have good ideas and just the pocket system. This is actually pretty lot of changing. We have community energy, so I think it was a good choice.
Thanks, Ingo, for that. And I think we're going to come back and talk about things like interoperability and sort of community slightly later on. But let me move on to John. John, perhaps could introduce yourself and sort of tell us why Polkadot for Mythical Game.
Awesome. Yeah, I'm John Linden, and thank you for having me on. Sorry, my voice is a little off. I'm still recovering from Token 2049 last week, so a little off here. Like I said, I think we're actually, what's interesting, Ingo was one of the first parachains, and I think we're the newest kid on the block, literally. So our chain is just going live. It'll actually be live in about 2 weeks here. Mythical is basically, we provide a Web3 platform predominantly for kind of more traditional games on mobile and PC console. So we have 3 games on the platform already. We have a game called Blanco's Block Party on PC, which, is the first game we really put out. 1.3 million players in that game. We're actually in the process right now of moving that game into mobile alongside with support from Apple and Google. Our second game is a game called NFL Rivals, which is just approaching 5 million players that have installed that game. So I think at this point, it's probably the largest Web3 game ever. And we did that again in partnership with Apple and Google. We have a third game, which is our first third-party title. Another developer has been building on our chain tech called CM Games. They have a game called Nitro Nation World Tour. That game is still in soft launch right now, but it has over 500,000 players in soft launch. So we're very excited about this. I think we're really focused on kind of big economies, big games. We build on top of the Mythos chain, the Mythos parachain, and which uses the Myth utility token behind the scenes for pretty much everything. So exchange of currency, gas fees, staking, all that stuff is coming. We really looked at a lot. We started off honestly on EOS back in the day in 2018. We were really interested in having a proof of stake network back then. We had some obviously challenges. EOS kind of lost some support. We ended up moving to kind of a permission sidechain, an EVM permission sidechain, which actually did really well for us in terms of functionality and being able to deliver to our consumers, but it still felt pretty disconnected. We weren't on mainnet. We weren't able to have the same token trading, even though we have nearly 1 million wallets on that chain. We wanted to have a new chain tech that really can support the future, right? Support a truly decentralized wallet system, as well as be able to deal with our kind of custodial accounts in the game itself. And honestly, Polkadot's been an amazing choice. I think Polkadot is fairly misunderstood to some degree. I think even our own tech team, when our team went into it, they were kind of like a little hesitant. But honestly, now that they've been in the code, they're really learning about it. It does everything we want. The concepts of these palettes or being able to change your runtime and upgrading, like you guys mentioned, is really, really remarkable. And I think it's by far the best solution in the industry from a technical perspective. And it's going to allow us to do absolutely everything we want to do as we scale these games into tens or hundreds of millions of players.
Nice, thanks. I think we're definitely going to talk about all of those games later, John. But I think let's zoom into KILT first with Ingo, and I think as Ingo mentioned earlier, KILT is really a protocol for decentralized digital identities, right? And this concept, and we're seeing a lot of interest around this space, right? So KILT, WorldCoin, and then recently I think Human Code as well, something that was announced by Telegram and the Chain Palace. I think Ingo, could you perhaps tell us more about the problems that KILT is trying to solve, and what are some of the use cases do you see for the digital IDs that you're issuing now on your protocol?
So first of all, can you hear me now? I thought there was a sound problem. Is that better? I changed the network.
Yeah, I think it's better. Yeah.
Okay. For security, to be sure, I switch off the camera. So digital identity, digital identity is something which first includes something we call identity, and identity is a concept which always consists of 2 different parts. One part is in the real world, for example, represented by your face, your fingerprint, your signature. So these are things that you definitely make yourself and which cannot be switched off by anyone else and which cannot be controlled by anyone else. That is what we call an identifier. And then adding on top of that, you have verifiable credentials. And this is, for example, your passport, your driver's license, your university degree, your fishing license, your library card, stuff like that. These things are all somehow connected to one of your identifiers. So, for example, they have in the passport, you have a picture of your face in that. This is a very decentralized system that we have in the physical world, because my face is my face. No one gave it to me, right? and no one can switch it off. And also the issuers are different ones, so anyone can become an issuer. The fishing club can be an issuer, the government can be an issuer. So they are side by side, right? And I control those credentials. I use my driver's license maybe for entering a bar, and the issuer of the driver's license will never find out that I actually used that thing for that. So it is also very privacy preserving. So we have a really nice system in the physical world. In the digital world, this is a little bit broken because here we have some big companies which control the digital identity, and you're basically an entry in their servers as your digital identity. And this is not really self-sovereign. So what you can do against that is that you can try to take the physical model and actually replicate it in the digital world. And this is what DIDs and verifiable credentials stand for. And KILT is an implementation of DIDs and verifiable credentials. It's not that we invented them. DIDs and verifiable credentials are a concept which was brought out by the Decentralized Identity Foundation, which is a huge organization with more than 350 companies in there, also governments in there, which worked together with us like for 5 years to actually bring out a specification and an international standard, standardized by the W3C, how those DIDs and verifiable credentials actually look for making them compatible, right? So that I can use my KILT DID and use it in a Microsoft environment. And and we worked together with those guys and brought through the standard through the W3C, and in 2022 finally we got the standardized, and now we see that as the standard is there, more and more big companies but also governments jump on the standard. So we can now say that the digital identity will be DIDs and verifiable credentials. There is no question about it. It's not like, oh, maybe something else is going to emerge. No, it's not. And it's also entering the blockchain space here and there. So so we actually are an implementation of the international standard. This is what KILT does in very short.
Yeah, very interesting. I think it's not something that people are the most familiar with, or something that people are most aware of. And I think recently there was a project I saw that KILT partnered with Deloitte to launch a KYC credential for Polymac, right, which was like a fundraising protocol that's also a parachain on Polkadot, right? Could you tell us a bit more about this project? And I know you mentioned how the community on Polkadot is really collaborative, and the tech allows everyone to interoperate. Could you tell us more about that as well? Like, how does the cross-chain architecture really help you build out for other parachains?
Yeah, so I'd like to talk about Deloitte maybe first for a bit, because Deloitte is actually a very, very beautiful case for how blockchain and industry can collaborate. Because what Deloitte does is they do KYC. You all have done KYCs, like probably more than you actually wanted. And the problem with KYC is that you do the KYC, and next day you want to enlist on another exchange, and you have to do it again, because those credentials are not reusable. You do them for one company all the time. And Deloitte is also in the business of doing KYC. They were on paper KYCs before, to be honest. So they weren't really in the digital world. But they thought, actually, there's a huge market for that, not only for banks, but also for the whole crypto world and so on. So what we should have is we should expand our business into this world, and we should be better than others. So how can we be better? First of all, we are Deloitte. Everyone knows Deloitte and everyone trusts Deloitte. You can basically build an internet passport from Deloitte, and every government, or most governments, will probably accept that thing. And the other thing is, let's make it reusable, so that you only do the KYC with Deloitte once, and then you go to this government, and then you go to this project, and then you go to this exchange, and then you go to that bank, and you always show only your credential. That's enough. And now they needed a technology to build that on. And KILT is exactly that technology. So they chose us to build it on. But the cool thing about that is that they're still in the KYC business. So they are earning a lot of money with making the KYCs. And we are very happy about it, because every time they make a KYC, they basically lock one of our DIDs on our chain, which makes our network more valuable. So it's a win-win situation where we make a winning network and they make big business on top of that. So this is great. And now to Polymac. Polymac was the pilot for that, actually. So Polymac is are friends of us. So we even share staff. So someone who worked for us before founded Polymac later, and even the idea Polymac is actually from me, and also the name is from me. But we gave it to those guys because they wanted to spin off, and it is so far from identity that we said we cannot actually do that in our KILT team. So we were happy if somebody else does it, and they served as the pilot for Deloitte. So that is the first time. What they're doing is something like a launch pad, you could say. Probably they're not happy if I say a launch pad, but it is some kind of a launch pad. And launch pads are normally not very much regulated, and this is sometimes a problem for the project because they, for regulatory reasons, actually need to know who their investors are and so on and so on. So what they built was, I think, the first worldwide, the first regulated launch pad. So you go to the Deloittes, you get your KYC credentials, and they make basically everything clear so that you can be an investor in projects. And then you have this KYC credential, and then you have the Polymac platform, and on the Polymac platform you can then invest in different ICOs, for example, for projects that they support. And that is also pretty cool because normally, you probably participated in one or two ICOs. You do your KYC all the time, right? And here you go with Polymac, you have one platform, you have one KYC, and you're basically good to go for anything that comes down the line on the Polymac platform. Pretty cool things. So this is how we collaborate. This is how we collaborate not only inside the Polkadot ecosystem, but that we also use the externals like Deloitte to actually produce more value inside our ecosystem. So that's it.
Thanks a lot. And I think that's really an interesting use case. And like you said, bridging, a sort of very traditional, I would say, company with Deloitte onto the chain, right? But also then using that to with another parachain, and you could sort of see, use it for Polymac, but also other possible use cases as well that would require sort of a KYC. I think I want to come back to Bill. I think Bill, big changes coming for parachains with Polkadot 2.0, right? Coming later this year. I think one of the things back in 2020 and 2021 that people were really excited about during that time was parachain auctions, right? So I think even right now, right, to run a parachain, one of the main ways that you sort of can run your own parachain on Polkadot is you need to go for an auction, right, and bid for a slot, and then you sort of get that slot for a period of time, say maybe 2 years or whatnot. But this is going to change, right? And I think this is one of the big changes coming as part of Polkadot 2.0, and with something called agile call time, right? So I'm really hoping for you come and tell us a bit more about Polkadot 2.0, right? What's happening behind the scenes, what's behind these major shifts, and what is sort of the outcome, right, that the Web3 Foundation and the Polkadot ecosystem is hoping to see from launching Polkadot 2.0.
Yeah, so I guess the thing to keep in mind is Polkadot 2.0, it's really like a series of changes. It's not one big bang that's going to change everything, but rather a series of improvements. So the way I like to think about it is like, think of the relay chain as a bunch of computers, and each parachain is like a program. And right now, what you have to do is win an auction, and then say, all right, for 2 years, I'm going to use this computer just for this program, which I think we all realize that's kind of inefficient, right? Like if I'm not using my computer, my son should be able to use it. Or if I'm just using it for one thing, right? If I just have Telegram, which isn't taking a lot of CPU, I could run a movie also, or Emacs, or a program, whatever I can run lots of different programs. So the whole point of this is to make it more efficient from the network perspective, that if you have a parachain that only requires a little bit of CPU space, then it doesn't have to have, use this entire computer or core, as we call it. Or conversely, if you don't need it for that long a period of time, right? Or you only need it, you don't need to produce a block every 6 seconds, which is the maximum amount of time, right? The maximum speed you can produce blocks now. Let's say you're following the Bitcoin blockchain, you're producing 1 block every 10 minutes. It's very inefficient to basically have an empty block, right, every 6 seconds. So the basic idea is to make that more efficient, where we can make better use of the core time, right? It's more agile, but also to make it easier for teams to start, coming up and working at their schedule, right? These auctions, they occur every 2 weeks. It's a bit of a slow process. You may lose an auction or two before you win. So generally the idea behind Polkadot 2.0 is to make it more efficient from a technical perspective, and also much easier and more powerful and flexible for the builders, right? Because that's really what we're here for. When you think of Polkadot, like, our goal at Web3 Foundation is to make it easier for teams like Ingo's, like John's, like all of the other teams building on Polkadot to buy what they need, to access what they need, not have to pay for what they don't need, and to do it on their schedule. So basically, easier and cheaper and more straightforward for the developers of the parachains.
Nice. I think moving on to John. I think John, we talk about sort of enterprise or industry use cases with Ingo, but obviously, right, you're in the gaming space, and that's a very different use case for blockchains, right, compared to digital identities, and even the whole idea around money, and how Bitcoin started and things like that. And I think we've done I would say a few years of Web3 games now, and I think the obvious question I think people will ask is still is like, why should games be built on a blockchain stack, right? Why embrace blockchains and things like that? And it's gotten its fair bit of skepticism, to put it kindly, from the traditional sort of gaming community. um Tell us more about Mythical Games, and why you and your company have sort of embraced the blockchain and sort of Web3 in general.
Yeah. So I've been in the game industry for a very long time before blockchain. So I was originally a studio head at Activision Blizzard on the Call of Duty franchise. My COO ran BattleNet for Blizzard. So we've had a long history of kind of big games, big economies. And I think one thing we have seen for decades now is what we called them gray markets, right? Because anytime you have kind of an asset that a player could earn, especially if it's time-based or quantity limited, it becomes valuable to the consumer, right? And what we saw forever is we saw people selling Fortnite accounts for free Fortnite accounts on eBay, right? Why would somebody go buy a free Fortnite account on eBay? Well, it had a skin of DJ Marshmallow or whatever from 4 years ago you couldn't buy now, and that had value to somebody, right? So digital assets do create inherent value. And I think what we saw initially was this is a way to have a system that is actually, like fraud free, right? Something that basically you can make sure when you transact with someone else, you can guarantee you get that asset, right? So I think that was the fundamental first step. What we've seen out of this has been really, really interesting over the last couple of years. One is that it's not just about buying and selling and making profit, right? That's, I think, a misnomer of a lot of projects is like, come in and buy, you're going to make a lot of money. I don't think it's that, right? I think it's partially that. There's definitely some of that in there. But what we've seen is that it also ties back to digital identity as well. So, I have 2 daughters, and their Spotify playlist is as much their identity as our CD collection was, right? Digital identity is an important thing. And what we have seen that's interesting is in like an NFL Rivals, we see some people, if I earn, and sometimes you don't even buy it, you have to earn, and you get Travis Kelce from the Chiefs. Well, maybe it gets priced by the community in the market at $1,500 US. So a lot of people, some people will sell it, right? But there's so many times I see that people view that as like, oh, my collection just went up by $1,500. My digital identity just increased by $1,500. So it's really, really interesting watching this social dynamic play out in these economies. And we're seeing tremendous results. We're seeing, a big boost in revenue, net revenue to the game developer. We're seeing players spend a lot more time in these games. I think we're seeing about 50% more play time when you have access to sell than when you don't. So we're seeing a really great stuff there. We think there's a lot of other uses. Blanco started tapping a little bit into what we call the creator economy, so that you can now let other people almost have this business development layer within these digital worlds, right? You can bring your crafts, you can bring your art, you can bring whatever you're kind of contributing, and have a way to be entrepreneurial in these worlds. And I think that's really exciting. We have almost every Blanco, you kind of see these statues behind me, these are all real world artists that brought digital characters into our world, and they were able to make a living in these games. So I think that's really fascinating as well. I think we're going to see a lot more uses of that. Things like tokenized guilds, right? So every guild could eventually become a DAO, right? There's going to be a lot of things we can do. And when you have that blockchain behind the scenes, it becomes very trusting. It becomes, all the principles of blockchain kind of play out. So we think it's really exciting. We think we're just getting started in terms of what games can do using blockchain tech.
Nice. And I think obviously you talked about NFT Rivals, which is clearly, I think, your most successful game to date, and obviously the idea of pulling cards and pulling Travis Kelce, right, and suddenly people like him. Maybe it's Taylor, and sort of like the value of his account goes up, and the marketplace, as you said, is a big part of the experience, and sort of driving a lot of time span and attention. Do you think this is sort of the future? Do you think this is a permanent feature for all your games moving forward, or you think like maybe with Blanco there's sort of like a different model or transactional model to a certain extent, and maybe when the third game launches, there's slightly a different one. How do you necessarily think about this?
Yeah, that's a great question. So I think we've treated our marketplace a little bit different, I think, than other normal NFT marketplaces out there. Most NFT marketplaces, you kind of have two options. You can kind of buy an asset with a credit card or via a ramp or crypto, or maybe you can make an offer, a counter offer for that item. That's pretty much what all the major NFT marketplaces do. If you think about gaming and you look back, 20 years ago, with like World of Warcraft or EverQuest, you had two panels. Gamers are not necessarily crypto traders. They're not necessarily financial traders, right? They're consumers. They think in terms of, I want this and I will give you this, right? And if you look at almost every game, it had two panels that popped up and I could put what I wanted to get and what I was willing to give up in that. And I think that's been something we've really played out. Even games like Baldur's Gate right now, that's out now, same mechanic. And that's kind of how gamers think a lot of times. And we've kind of mimicked that in our marketplace. So yes, you can come in and a Patrick Mahomes could go for $500 US. Great. I could buy it with a credit card. I could buy it with crypto. But what we can also do now is we can say trade. And so what happens when I say trade is he shows up on the left side and all my assets show up on the right side that maybe I don't want to get rid, or maybe I want to get rid of. So maybe I'm not a big fan of the Green Bay Packers anymore. And I start selecting these Green Bay Packers, right? And as I select them, it's being priced in real time by activity in the market. And I select 4 of them and it says, oh, $500, $500. So now as a player, I can hit trade. I didn't spend any money. It's a cashless transaction. I received Mahomes and I got rid of my 4 Green Bay Packers, right? So it's a new way to kind of create your collections. Behind the scenes, what happened was in one atomic Web3 transaction, we bought Patrick Mahomes from one seller and we sold those 4 Green Bay Packers to 4 different buyers, right? So we ended up having a 6-party transaction in one cashless transaction. Those are the types of things I get excited about. We've implemented this. We're also the only tech that is fully approved by Apple and Google to do the secondary directly in the game. So you can do it in the web, but you can also do it directly in the game. And since we've added that, we've added quick trading, we've added the in-game marketplace, we are now seeing NFL over half of the net revenue from the entire game comes from secondary fees. And that's really, really exciting, obviously, for the game developers. It creates a lot more engaging game. And overall, we're seeing just an awesome experience. And we're seeing that game after game, that same thing happen. So very excited on where that goes. I think it is, again, just the start of where we can take this. But it's creating, I think, a little bit more sustainable business for game developers. So it's kind of a new monetization model that we think is going to continue to catch on.
Yeah, and certainly I think monetization is sort of top of mind for the gaming industry at the moment. We saw a huge amount of layoffs at the start of the year. I think follow on from that is you mentioned that there are now other game companies that are now building on your chip, right? So that's a game in soft launch, and with others to come. I'm just wondering how the conversation is with some of these perhaps more traditional gaming studios, right? How do you sell them on this idea, right? There are so many different platforms you can build on, protocols you can build on. What's the conversation been like? Have people become more receptive, I guess, of blockchain?
Well, I think that's a great question and something we've heard a lot. I think we also heard the same thing, that gamers hate NFTs, and to some degree, I think they do. Some degree I do. There's a lot of normal NFTs type traffic I'm not super a big fan of, right? And I think a lot of gamers aren't either. One of the things that was interesting when we launched NFL Rivals, we went head to head with Madden, which has been around for 35 years, and so we launched a new game. We both in the app stores. And everybody kind of said, oh, you're going to get review bombed. Everybody's going to give you a 1-star review. Everybody's going to hate this. And one of my favorite stats of NFL Rivals right now is that Madden sits at a 4.7-star rating in the App Store, and NFL Rivals sits at a 4.8. And so we're actually have a higher rating than Madden that's been around for 35 years, right? So I find that very exciting. I think it is a misnomer that gamers hate NFTs. It's really how you utilize them, right? If you're just putting stuff in there and trying to sell a bunch of stuff for a lot of money, then yeah, they're going to hate that. But if you really build it into the core gameplay, I think it becomes very powerful. And we've seen, like I said, we've seen not only just more revenue come out of the games, but we've seen more engagement from the players. Players stick around longer. They engage more with the game itself. And those are very important to traditional game developers. So I'd say what we're seeing right now is there's been some hesitation, right? But I think we're seeing a lot of game developers now watch and see, frankly, stats we're putting out with NFL, right? Even Apple and Google, they're seeing what's happening now. They were a little hesitant too at first, saying, well, wait a second, if we let people buy from other players, are we going to make less money? We've shown them that it's not. In fact, a lot of players that come in, they come in first through a secondary trade, and then they go back and buy more packs from Apple and Google, right? So it's actually increased revenue for Apple and Google. It's increased revenue for the game developers. And what we're seeing now is we're seeing games with millions of players, not just games with maybe 10 or 20,000, but once we have games with millions of players like in NFL Rivals, we have real data, and we can see the real lift, and that lift just keeps climbing and climbing and climbing. So it's a really exciting opportunity. I think we're going to see many Web2 developers jump in. There's a lot of them already exploring very heavily. One of the things we did with Mythos Foundation in general is it's just not a Mythical project. We opened a foundation for any game company to kind of come in and learn and kind of explore and work together. And we have some great companies that have joined Mythos now behind the Myth token, right? We have Square Enix, we have Krafton that makes PUBG, we have Bandai Namco, Ubisoft, Sega, all these great companies that are exploring, and if they're not building already, they're researching it right now. So I think we're going to see a lot of it happen. It takes a little bit of time. Games also take a very long time to build, and so some people might be in the wrong phase right now to contemplate changing their economy. We are seeing a lot of them really think about it heavily.
Yeah, I think really exciting, and some of the names that you mentioned, well, all of the names that you mentioned have been in the gaming industry for a long time, and really excited to see them come on board as well. I just have a question on Myth chain, right? So you build your own chain, your own parachain at least, and do you think coming from I guess a non really blockchain sort of background as a significant challenge when you think through having your own chain? Was it sort of daunting? There are things around tokenomics, chain security, you now have staking to think about. Was it tough, right? And how does building on Polkadot sort of help simplify some of these things? Yeah,
that's a great question. I think for us, the EVM sidechain kind of did what we needed it to do on the consumer side, but we didn't feel whole. We didn't feel like it was really the potential where we wanted to go, right? So for example, every account was a custodial account, right? We got a lot of like, well, if you're holding the keys, is that a real wallet, right? And we wanted to go beyond that. We wanted to give players the options to eventually have their own keys, right? And have their own assets. And so things like that, we've been trying to look at on EVM for a long time. So with the move to Polkadot, frankly, we're super excited. Staking is coming. It's coming next month. It's built right into the chain itself, right? Governance built into the chain itself. We can easily add all these palettes that, frankly, Parity and Web3, all these have kind of published, but also other chains have also published as well, which is really, really exciting. The community between the parachains, I think, is the best I've ever seen, to be super honest. Everybody is really willing to work with other people. There's some great projects out there that people can start adopting, which is awesome. And it's fundamentally solved several problems for us. I think the biggest thing for us is we do work with Web2 and fiat systems, right? So we do have to have some type of custody account there, because introducing 5 million people to the concepts of crypto when they turn on the app it's a lot of friction. So we do have kind of this custody account. Also, the app stores are very big about that. So they don't think that a lot of consumers might understand what a private key is, and they don't want to lose their private key and suddenly lose Zelda, right? So we do have kind of a custodial in the game. It makes it very frictionless. It makes it more secure for somebody who doesn't understand it. But with the Polkadot architecture now, we can have 2 accounts to the same wallet. So literally now in the new version, when we come out, you'll be able to generate your seed phrase. And now you have basically a non-custodial account to that same wallet. And that's really, really exciting. Now, as you earn myth in the game, you could actually take that myth and go stake it or put it in DeFi or use it, to vote, whatever you want to do. And in fact, if you want to, you can revoke access from the non-custodial to Mythical and to the game, and it was just you take your assets, right? So things like that, I think Polkadot's really moving us to the next generation. It is very upgradable, which we love. It's we love having the security of the relay chain, and frankly, the last part for me is that I think where Gav and where they're thinking about Polkadot 2.0 is really light years beyond anybody else right now. I think so many people are still just thinking about DeFi and markets, and I think we're starting to think about what does decentralized social really look like? What does decentralized streaming really look like? And I think where Gav and the entire team at Web3 and Parity are taking that chain is it becomes kind of this decentralized supercomputer. And I find that absolutely phenomenal. I think the vision they have is bigger than anybody else I've seen in the space. And we want to kind of jump behind that, right? Because we think about things like social and streaming, and we think that as Polkadot 2.0 continues to grow, it's accomplishing everything we need to do right now in a very, very elegant fashion for our current product. But as we start thinking about what comes next for us, I think they're going to be ahead of the curve, and we'll be able to kind of embrace the ecosystem even further to really do a lot of amazing things in gaming.
Thanks, John. I think Bill wanted to cycle back to you. I think obviously a lot is happening within the Polkadot ecosystem, and Ingo and John have spoken great things about Polkadot. I mean, you work with the Web3 Foundation, right? Which funds R&D for decentralized protocols and things like that. I just wanted to touch on some of the work that the foundation does, right, in terms of funding and how do you guys go about choosing projects to fund, and Web3 and decentralization is such a wide topic, right? Like what are some of the areas of particular interest at the moment for the foundation?
So I would say our mechanism for determining what to work on is sort of twofold. One, we hear from the developers like what they're looking for, like what kind of tools are useful, and that's that's something we take into account. But another thing is what do people want to build on Polkadot, right? We want to see teams coming up with their own ideas, a lot of which we haven't thought about, right? People come up with these really interesting ideas, and we as the foundation have provided a lot of grants that again, we didn't put out an RFP for them. We have a whole page of like possible things to work on, but a lot of it is what is coming from the community. What are they looking to build? What are people excited to build on Polkadot or to help build Polkadot? And we have, in case anyone out there is interested, we are always looking. We have a grants program which has given out I think around 600 grants. Maybe it's a bit more than that right now, as well as decentralized futures, where we're giving out $20 million US plus 10 million DOT to teams that are looking to build on Polkadot. We have this new Jam prize. So Jam is sort of what might come after Polkadot 2.0. And we have a new prize out for people looking to implement projects on that. So I think that the main thing, we've given grants for infrastructure. We've given grants for pallets. So like John had mentioned, like getting these we have lots of these libraries, and if you want to build something on Polkadot, if you want to add staking into your parachain, it's very easy. You just add a library, right? You don't develop it from scratch your own. You say, okay, I'm going to use this library. If you want to OpenGov, which is like what we use on the relay chain, you use that, or there are other democracy pallets, identities. There are all kinds of different pallets you can just add. And so we've given a lot of support for those. But like I said, it's really two parts. What are people passionate about building on Polkadot, and what are people asking for to be developed on Polkadot? And Web3 Foundation, as the Swiss Foundation, we want to help those people do that. So if anyone out there, does have ideas for building on Polkadot, please get in touch with us. And if you're very passionate about building on it, we'll see what we can do to help you build it.
Yeah, sounds great. I think one more question for you is just looking across the sort of competitive landscape, right, across different blockchains. Obviously, you guys with sort of the parachain and the relay chain structure is sort of like a app chain sort of approach, right? Sort of similar to Cosmos having some of the similar ideas, but also now we're seeing the rise of sort of modular blockchains, right? Things like EigenLayer, Celestia, Dimension. These people are also sort of encroaching into your space, so to speak, or sort of having the same ideas and trying to build it out in their own sort of architecture or in your own way. How do you think these projects differ from how Polkadot is approaching your strategy and your vision? And do you are you looking at these and thinking perhaps there's some things also that we can take from some of these projects, and how does that sort of affect sort of your roadmap or the way that you guys think about the future for Polkadot?
Yeah, I mean, I can say, here at Web3 Foundation, we're always looking at other projects and seeing what they're doing, what they're bringing to the table, what the differences are. But I think the big thing that differentiates Polkadot from actually pretty much all of the systems that you mentioned and some others is really Polkadot provides this all-in-one solution, right? Everything that you need, we have sort of ready to go. So in terms of security, connecting to the relay chain, then you don't worry about having to have economic security for your network. We have the Polkadot SDK for developing your network. We have all of these other chains that you can interact with and interoperate with, again, right out of the box, both in terms of taking the pallets, using the libraries that exist for your specific chain, or using those chains, calling out to smart contracts on a smart contract chain, using identity, from KILT, interacting, with a prediction market on Zeitgeist. We have 50 different chains that you can interact with using a common language, right? So I think this is the big difference between all of this in a nutshell, is that we give you everything. If you want to build on Polkadot, it's not like, okay, well, we can provide you security and everything else is up to you, or we can provide you an SDK, but not the security. We can provide you data availability, but we give you everything. So there's a very specific and well-defined path to develop your project on Polkadot and to keep it running, as well as this ready-made community and all these other existing blockchains that you can use to add features to your chain. I would say that's the big difference that we provide.
Yep. And we're sort of coming up to the end of the meetup. I just wanted to sort of go around the table, sort of ask, with all the things that's happening in Polkadot, what are you the most excited about? Maybe it's a new project, right? Maybe it's a coming upgrade. Maybe it's a new parachain that's about to launch, or maybe it's something building on your own protocol as well. And perhaps we'll start with Ingo first. Yeah.
Yeah, so before somebody else takes it, probably core time is going to be pretty exciting, and it's around the corner. And this is actually a really, really big change, and so there's a lot of interesting aspects to that from game theory, how that is going to work out, and so this is really exciting for basically everyone who's in the ecosystem. I'm always excited about new projects. So I'm excited how Mythical is going to launch, but it's like every week that you get to know a new project. So last week I met a project which I had never heard before, which is called G6, and they are building on Polkadot as well, and they're building something which is going to be really important probably in the rollout for bigger organizations and governments. That's also a fantastic idea, fantastic technology that they're building, and I just never heard of that, and we're going to collaborate starting next Monday, actually. So these things are just happening on the fly. On my own network, like KILT, I'm pretty excited about basically one thing or two things. One is called the Decentralized Identity Provider, which just went live last week, which allows in a very, very simple way to use DIDs, the decentralized identifiers, on other parachains. And we're even planning to roll that out beyond the Polkadot ecosystem. So later, not this month, right? Much later, it's going to be able to access that from other L2s and L1s. So that's going to be also very interesting because it's a huge growth path for us. And there's another small piece of software we call OpenDID, which is basically implementing the OpenID protocol for those who know that, which is like the Facebook login with Facebook, login with Google button. Now this also exists with a login with KILT button, so that a Web2 project, knowing nothing about Polkadot, knowing nothing about KILT, knowing nothing about decentralized identity, can basically jump into the Web3 world with just configuration. There's no implementation needed. You just need a DevOps who implements that into your website, and your Web2 company somehow has a segue over to the Web3. So we tried it, so we can make it in less than 50 minutes. So it's actually very, very easy to jump over. And we also see that this is probably something which is for experimenting for people in the Web2 world who are not really 100% sure if they really want to enter this Web3, just to making a test. So is anyone going to use decentralized login? Yep. We will see if they like it and if their users like that. So that is things that excite me currently. 3 things.
Thanks so much, Ingo. Like, really sounds like lots of things in the pipeline. Bill, I'm gonna come to you because I know you may have to run off a bit earlier, but give us some thoughts and what are you most excited about?
Yeah, I'm always excited about anything that can empower people to do more, right? And there's actually 2 projects that are coming out, Appion and Tansy, which are like low code or no code solutions to build your own projects on Polkadot. So starting up a parachain, developing an NFT collection, putting up simple smart contracts without having to worry about all the details. I think we're going to see a lot of people start to play around with that, where you don't have to know Rust to do it. You can just if you have an idea, you can very quickly see if it works. And I'm really excited to see what kinds of projects people come up with, because that's the most exciting thing, right? When you can't even foresee what they'll come up with. Like there's just all of these ideas that'll start blooming.
Thanks so much. And John? Yeah.
Yeah, well, I said we're still kind of the new kid on the block here, so we're still kind of getting our stuff live. So I'd say the first thing is to get our stuff live and migrated. We are moving nearly 1 million wallets across. We're moving for a blockchain that's doing nearly 5 million transactions a month right now. So we're trying to make sure we change the engine in the airplane safely, right? So that's our first step. But I think what I'm really excited about, honestly, is we've been spending a lot of time with the community. The community is quite amazing. It's one of the most passionate communities I've seen in any of these ecosystems, and it's really great to see kind of some of these new projects. We've seen some like Invark. They're doing kind of this tokenized or like DAO structures, that I think are really fascinating. As I mentioned before, things like guilds could be kind of using some of that tech. What KILT's doing around ID, I think, is really exciting. We'd love to kind of figure out how do we do that. Around a decentralized social graph, so the DSNP type stuff, I think that's really fascinating as well. So there is a lot in this community, and I think they're all very, very quick to want to talk and figure out how do we get them working. And the fact you can just kind of do these cross-chain messages is really, really interesting opportunities. I'd say on top of that, the community has been so welcoming to us. We've had 3 wallets already reach out and integrate with us. Multiple DEXs have already reached out, integrating with us. The Block Explorer with Subscan is kind of already up and going. So, I mean, it's really been amazing to see kind of the support that the community is giving each other. And I think that's really important, right? I like I said, I find it the best community I've seen in any ecosystem yet.
Yeah, I think, last words to close out from everyone, any sort of advice, any sort of final thoughts for our community as well, since there's quite a few people on the call. And maybe Bill go first.
Yeah, I'm gonna go and then jump off. So I would just say, as John said, the community is very passionate. We have a very dedicated on-chain governance community, which I'm very involved in. I just recommend people try out Polkadot. It is sometimes it's a little bit different, but I think it's definitely worth getting used to and seeing all of the great things happening in this truly decentralized system. And people are it is really a community of builders, and so I look forward to seeing people around on that.
Yeah, thanks, Bill, and thanks for joining us. I know you have to drop off. Thanks so
Yeah,
much.
thank you.
Thanks. And John, any last advice, parting wisdom?
Yeah, well, I mean, I'm excited. I think as we move over, Polkadot will be the #1 gaming blockchain in the world from sales, transactions, and wallets. So we're excited to kind of see that transition happen and kind of get Polkadot up there in the rankings there. So we're excited about that. But I think overall, yeah, again, I'm excited to see where it goes. I think the roadmap is so super solid. Kind of where things are happening. We're excited. We're going to be announcing a bunch of new partners into Mythos shortly after we get migrated. We have a bunch of new games we're going to be announcing as well. So I think gaming's going to be the future of gaming will be Polkadot. I think it's going to be big. I know there's other ones out there, but I think if you want to go off of data, I think Polkadot's going to start dominating it. What I would say is that I do think, frankly, Web3, when I talked to Bill, Web3 and Parity need to do a little bit more in kind of documenting the functionality. It's really amazing when you jump in what you can do. We've eliminated, frankly, a lot of systems that we had on the EVM side that we don't need anymore. Things like, frankly, like a liquify, right? On doing vesting of tokens, right? Built in the chain. All these different types of systems, it's already built in, multi-sig. We were using other accounts for multi-sig, built into the chain, right? So all these things are there, and it's maybe not super noticeable from day one. And I think we got to kind of highlight that more as a community of all the amazing stuff you can do. But it's been really remarkable, and we've really simplified our architecture. And also we're happy to be part of it.
Thanks so much for that. And last but not least, Ingo, to sort of close us out.
Yeah, I was thinking what I can say, but I think Bill and John basically talk to the developers. So yeah, you're all welcome. Please play around with Polkadot, do great things, and build parachains and app chains on top of Polkadot. But even if you're not a developer, look into it. Look into the governance. I think the governance of Polkadot is the most exciting thing, and it pulls you in and it never lets you go. If you just start reading, go on Polkassembly, look at what the discussions are, look at what the type of money that is spent there for things and how people actually discuss that. So if you own a couple of dots, you basically are part of the decision process there. So you can steer the whole thing, the whole tanker, actually from your computer from your desktop, and be part of the community, even if you're not actually building something. And that is so interesting and so exciting. And I can promise you, there's no blockchain project anywhere in the world which is close to this democratic thing which is happening there. So it's really, really amazing. It has like a daily news show on the internet, right? It even has yellow press in the internet. So there's thousands of people basically engaged every day in steering this system as a community, and this is so fascinating. So to be part of it is just well, you can do nothing else then after you tried it. So it's really, really addictive, and really cool to join this thing. And then you get such a good view on what people are actually building, and why are they building that. And then maybe later you want to become a technologist and build your own stuff on that. So and there's room for everyone. Like the Treasury is funding also marketing people. It's funding events. It's funding basically everything that brings value to the Polkadot ecosystem. Very, very interesting stuff. Not 100% only technology, also very much just society. Very interesting.
Yeah, definitely. I mean, governance and community sometimes less talked about and certainly underrated when we discuss some of these ecosystems. And I think that's all the time that we have today. Thank you so much, John and Ingo, for joining us, and obviously Bill, who sadly had to jump off slightly early. It's been a great conversation. I definitely learned a lot about the Polkadot ecosystem. I'm quite sure our users do as well. So thank you so much again for joining us, and thank you again to the users who are still here with us. Thank you so much for joining the meetup. Goodbye. Take care. Have a safe day. Have a good day ahead. If it's not night where you are. Thank you so much, guys.
Thank you. Appreciate it.
Thank you. Bye-bye.
All right.